Inga. I am Jeyabaharathi, Assistant Professor of Commerce, Jeyabaharathi Com College. Issues of SAS. Introduction. What are SAS? Futures of SAS. Type of SAS. Preference SAS. Why does a company issue shares? How do buy and sell SAS in India? Key differences. Stock with SAS. Conclusion. Introduction. Issuing shares involves a company offering ownership stakes to investors, typically to raise capital for growth. This process can dilute existing shareholders' ownership and impact the company's financial structure. According to Bajaj Finserv, careful planning and legal compliance like adhering to the Companies Act 2013 are crucial for successful share issues. What are SAS? SAS are per unit capital of a company. When a company needs funds for growth, it can offer shares to investors. These shares represent part ownership in a company. Here, you are entitled to dividends and other benefits. Shares denote part ownership in a company. Equity shares and preference shares are two main types of shares that companies issue. Both equity and preference shares are further subdivided into different types. Futures. The value of shares is determined based on the demand and supply in the market. It constantly fluctuates. Few shares may allot you voting rights. Shares are perpetual in nature. They do not have a specific maturity date. Types of shares: equity, preference, treasury, class A, class B, and class C. Equity shares. Equity shares are the most common types of shares that are offered by companies, also called ordinary shares. Equity shares from the bulk of the share capital of a company. Futures. Equity shares are issued at face value, but they trade at market value. Equity shares carry a high level of investment risk. Dividend income is a possibility if the company earns profit in a financial year and distributes the same among the shareholders. Types. Equity shares are subdivided into various types based on the broad parameters. Classification based on share capital: authorized share capital, issued share capital, subscribed share capital, paid up share capital. Classification based on returns: dividend shares, growth shares, value shares. Other types: bonus shares, right shares, sweat shares, voting shares, non-voting shares. Preference share. Preference shares are also part of the share capital of a company. However, holders of such a shares get preference in dividend payments and also at the time of liquidation. Hence, the name. Futures. Preference shares are not commonly available on the stock exchange for trading. In some cases, preference shares they promise fixed dividends. Preference shares generally don't allow voting rights at the time of liquidation. Preference shareholders are first preference. Types: cumulative, non-cumulative, participating, non-participating, convertible, non-convertible, redeemable, irredeemable. Other types of shares: treasury shares, class A, class B and class C shares. Why does a company issue shares? Companies issue shares primarily to raise capital for their operations, growth and expansion. Companies can also issue equity shares for the following reasons: to raise capital for various operations, to get listed in the share market, to gain visibility, to expand their market research. How to buy and sell shares in India? Buying and selling shares in India involves a few steps. Let's look at them. Buying shares: open a demand and trading account, KYC verification, add funds to your account, research and select stocks, place an order and track. Selling shares: decide to sell, log into your trading account, place an sell order, monitor your order and evaluate your investment. Key difference: stock vs shares. The following are some of the essential points of difference between stock and shares: ownership, denomination, paid up value, nominal value. Conclusion: shares denote ownership in a company. The most common type of shares are equity and preference, which are further subdivided into many types based on various parameters such as returns, share capital, etc. Reminder: equity investment are highly risk. Consult your advisor before investing in shares. Thank you.